Assalamualaikum, my name is Mohd Fahmi. So I'm the first person in my group to present today. The title is Legal Advisor Service. Okay, let's get through to the introduction. Introduction. Companies in Malaysia are those entities incorporated under the Companies Act 2016 or under the previous Companies Act 1965. When one or more person registered the company for lawful purpose and comply with the registration requirement of the Companies Commission of Malaysia, whose chief executive is the registrar. It is considered as an entity that can be incorporated as a company under Companies Act 2016. A corporation, on the other hand, has a wider definition to include any entity formed or incorporated or existing in Malaysia or outside Malaysia, foreign company, limited liability Malaysia, or foreign partnership, but it doesn't have any public authority. Next. Classification of company. The Companies Act 2016 has classified companies into three types, which is company limited by shares, company limited by guarantee, and unlimited liability companies.
Okay, I'm Syahmi. Now I will talk about types of company in Malaysia. There are 5 types of companies in Malaysia. First of all, public companies. Second, private companies. Third, exempt private companies. Fourth, foreign companies. And lastly, government-linked companies. First, public company. Public company is a company other than a private company that is required to have the word berhad as part of and at the end of its name. Public company can be limited by shares and guarantee. The minimum number of members is 2 people. There are no limit on the maximum number of shareholders. Second, private company. Private company is a company that have the word sendirian berhad as part of and at the end of its name. Liability is limited by shares. The total number of members does not exceed of 50. And there is a restriction on transfer of shares. And third, exempt private company. Exempt private company is a private company with no more than 20 members. Shares are not held directly or indirectly by any corporation, and it need to file its annual financial statements with the Register of Companies, provided that the company files a certificate that signed by a director, the secretary, and the auditor of the company, stating that the company is able to meet its liabilities as and when they fall due. And fourth, foreign company. In Division 1 of Part V of the Companies Act 2016 governs the regulatory requirements of foreign companies. A company, it is a company, corporation, society, association, or other body incorporated outside Malaysia, or an unincorporated society, association, or other body that can sue or be sued or hold property under the law of its place of origin and does not have its head office or principal place of business in Malaysia. And lastly, government-linked company. Government-linked company corporate entities that the government owns some or all of the share capital. It can be private or public companies. The government may hold a stake in the companies using a holding company, concentrated in specific industries to boost the economic development of the country. Now I will talk about the registration requirements of the Companies Commission of Malaysia, CCM. First of all, we need the name of the company. Second, status of whether the company is private or public. Third, nature of business. Fourth, register office. Fifth, in the case of company limited by shares, the details of class of shares and number of shares are held by each member. Sixth, in the case of a company limited by guarantee, the amount the member undertakes to contribute to the assets of the company in the event of it being wound up. Seventh, name. We need name, identification, nationality, and residence of every director. That's all for me.
Hello, my name is Irfan, and today I'm going to talk on financial reporting requirements based on Companies Act 2016 and Financial Reporting Act 1997. So, there are three, which are accounting and other records, financial statement, and director's report. So, let's start off with accounting and other records. According to Section 243 to Section 251 of the Companies Act 2016, it covers matters pertaining to the preparation and presentation of the financial statement. All accounting and other transactions should be kept in such manner and recorded within 60 days of the occurrence of the transaction, and it must be retained for 7 years so that it can be properly audited. The next one is financial statement. Financial statements are to be prepared at an interval of not more than 15 months. Financial statements are also to give fair and true view of financial position of the company at the end of the financial year and financial performance of the company for the financial year. This financial statement must be approved by the Board of Directors, BOD, and accompanied by the statutory declaration. Last but not least is Director's Report. According to Section 252 of the Companies Act 2016, the Director's Report must be attached to the financial statement of the company. It contains business review, description of the company's principal, and others.
Assalamualaikum. My name is Mohd Hakimi Haniff. They have element of annual report, which is have 5 elements. 5. So firstly is chair method. Chair method is like how about their meeting follow the rules with perfect timing or not. Secondly is financial statement. How about their transaction of money and expenditure. Thirdly, audit commit report. How about their report? How about the staff working there? Fourthly, statement of internal control. How about the control in the company? And lastly, corporate governance statement. This is corporate governance statement refers to way of the company by the government as well. It is follow their purpose or not. Secondly, a legal requirement in Bursa Malaysia Security Berhad. The function of legal requirement is empowered to take enforcement action against listed issues and directors for breach of the listing requirement. And the legal requirement is guided by the legal duties imposed on directors under the Company Act 2016. They have in the company. First requirement is that listed companies must make additional disclosure regarding the performance of the company. Another requirement is that they must make preliminary statement of result within 6 months. Listed company also have to issue half-yearly report regarding their performance within the 3 months at the end of the half year.
My name is Muhammad Hafizi. I want to share advantage and disadvantage them from business partnership to company form business. Advantage. Number 1. Limited liability. The liability of members in a company form of business is limited to the nominal value of the shares and they have acquired. Number 2. Perpetual existence. Death, insanity and insolvency of shareholder or director do not affect the company existence. A company separate legal entity with perpetual succession. And number 3, professional management. The management is in the hand of directors who are selected by the shareholders and are well experienced persons. Number 4, diffusion of risk. As a membership is very large, the business risk is divided among the several members of the company. This is an advantage particularly for small investors. Number 5. Transferability of shares. The share of public company are freely transferable. The shareholder can dispose of his shares at any time when the market conditions are favorable or he is in need of money. Next is advantage. Number 1. Lack of personal interest. Since they are employees are not the owners, they have hardly any personal interest and commitment in the company. This will result in efficient and turn losses. Number 2. Management mischief. Sometimes the director and manager misuse the company resources for their own personal benefit. This can bring losses to the company and result in a closed company. And number 3. Restriction. In the contrast of proprietorship and partnership, a company has complete with more legal requirements, even though it will consume considerable amount of time and effort. Number 4. Delay in decision making. In company form of business, not a single individual can make policy decisions. All important decisions are taken either by the board of directors or referred to general house. And the last, number 5, difficulty of promotion. Promotion of a company is not an easy task. A number of stages are involved in the company promotion. The suitability of a particular type of business is to decide first. A lot of legal formalities are required to be formed at the time of registration. Yes.
Hello, I'm going to talk on the differences on element of disclosure in financial statement between company business and sole trader business. There are 5 elements that make a difference in the financial statement between company business and sole traders. Those 5 elements are capital, expenses, audited, tax, and rules. So let's start off with the first one, which is the capital. For the company has unlimited capital because shareholders have contributed to the company's capital by buying shares. Meanwhile, sole trader only have limited capital because there is only one source, which is the owner. The second element is expenses. For the company has a lot more expenses than the sole trader. This is because there are more membership in the company. So it means that they can afford more expenses to make an even higher quality goods or purchase more raw material. Meanwhile, sole trader only have little expenses. Depends on the business of the sole trader or the sole trader's funds. The third element is audited. The company must get their financial statement audited. So they need to follow the proper accounting concept and the regulations of the other regulatory framework. But sole trader doesn't have to get their financial statement audited as it is not a compulsory for them. The next element is tax. The company has to pay tax and it is treated as a separate legal entity. Meanwhile, the sole trader also have to pay tax, but it doesn't include it in their income statement. The company's tax is higher than the sole trader's tax. Last but not least is the rules. The company has to follow the accounting principle and concept that has been set by the government. This is to ensure that the company's business is efficient and those financial statements will have a true and fair view of the financial position of the company at the financial year and the financial performance of the company at the end of the financial year. Meanwhile, sole trader doesn't have to prepare any financial statement. It is up to the owner's decision whether or not to prepare a financial statement, but it is not a compulsory for them. As the conclusion, Abu Partnership Enterprise should definitely be confident in Badrul by changing their form of business from partnership to company form of business. This change can give an impact on their business in terms of control, obligation of liability, investment opportunity, and expand their business growth. Moreover, it will be more sufficient as more people that has joined can contribute toward the company in terms of knowledge and special skill. Even though the company has its disadvantages, but it can surely improve their business. With the special presentation that have been presented to Ali, Abu, and Amar, they now have the knowledge and confidence to change their form of business, as the presentation has explained to them everything that they must know and required to do on company business and its legal requirement. Thank you.